Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It is 8:30 Eastern Standard Time, and on the East Coast here of the U.S. of A. And it is 10:30 now, 10:31 in Tokyo. So, just give you a flavor this morning of the world markets and their time zones. All right, let's take a look at the dollar index. You can see that right there. It's still a little firm today as it was yesterday. Just playing with that little firmness there. Oh, and we're starting to load in the chat line at the same time. Let's put it up on Chicano right there. Chicago Quant Technologies. Bang, bang, bang. Still in a buy. It just seems to not want to let go of that buy situation, which is interesting. The weekly, you can see right here. Let's move that out of the way. There we are. As you can see right, where's that mouse at again? Hello, mouse. And as you can see right here, the weekly does not seem to want to walk away. It's trying to get into the buy. It's doing that. It's doing that thing, But overall, it's not really doing anything more than just that. It's just bouncing around. So in this case here, you can see the fast has moved through the zero line, showing some strength. We have seen the 30-year bond trying to, not trying it. It has changed. Interest rates are rising a little bit, nothing major. Now that the banking situation is over with, I guess it's kind of. I think there's a lot of comfort level developing about how they resolved these last two situations in the banking community. SVB, they bailed out the big Democrats, and that was not very good. But then the second time around, the savings and loan, First Republic, seems to have been merged, bought the correct way using SLIDC insurance, and so that made things a lot better. And so at least it's not a major. They think there's some smaller banking situations still having its issues because of the interest rate factor that we talked about in the last couple of days, and the foolishness of the bank managers or ones that run the investments at banks borrowing short-term, lending long-term, and the rates on short-term are so much higher than long-term that it obviously hurts them. So that has been the real problem at the moment. That's exactly what that has been. And so in other words, they're borrowing money at 5% or 4% or 3% and lending it at 2 and 1%. That doesn't work. That's a guaranteed loss of money. And so that really changes the whole complexion of it all. And so that's why we're seeing that stress. Now let me see. I'm trying to get up on the chat line. We're having a little issue here this morning. Mr. and Mrs. Google are doing their thing as usual, trying to torture me. But we'll keep on going, and we'll have the chat line up there in a few seconds. I see a little circly thing going around in circles, so I guess we're going to get warmer to it. I was going to restart the whole computer, but I thought, let's not try that and just shut down from the operating system instead. Doc likes to pretend that he can run a computer. Let's see, and let's go to, there it is right there. Restore? No, I don't want to restore anything. There we are. And there we go. Now we're going to be able to see the chat line, and that'll be good. And then I can answer or see what people would like to see. And what else can we say about the dollar? I guess that's about it, really. That strength. And I'm just waiting for the chat line to jump up so I can see if anybody's even paying attention to me this morning. And come on, machine. Lots of circly things. They just want to load as much as they can into you. They need to sell you this, that, and the other thing. That's why when they say it's free, it's not free. Anyhow, as we wait for the chat line to pop up, it looks like it's getting warmer. It's closer. I see YouTube now. Hooray for us. There we go. Upcoming stream of Doc. There we go. Hooray for us. All right. There we go. I see Robin. Hello, Robin. I see Paul Henry Michael. Lemon de Valcart. I'd like the Paul Henry. That Paul Henry Michael sounds like a John Wayne character. I like that. Like one of John Wayne's movies, you know? Are you a cowboy? But then it says, Le Monde de Valacourt. So you're not a cowboy. You're an aristocrat. And there's George. Hello, George. And so, yeah, yo. There we are. Skip the ads. Come on, machine. Let me be able. At least I can see the chat line. That's a good thing. So Paul Henry. Yes. There was the Duke. John Wayne used to be John Henry. I like that. We do everything cowboy around here. We live in cattle country, so we do lots of cowboy here. Lots of cowboy. All right. And Momentum West. Now that's really good. Many banks have obviously avoided financial problems since the rate increases started. But so why did the First Republic get into trouble? Was it just reckless? Yes, exactly. Trading or investments by the bank. Investments by the bank. What they've been doing is most of these banks have been doing it for, they keep on thinking interest rates are not rising. Just like, look, when you have a Federal Reserve that tries to tell you for a year and, was it 2020, March of 2021, that inflation, right? So it was a 222. I guess it's 222, right? So in March of 222, finally the central bank and the U.S. Treasurer, Janet Yellen and Mr. Powell, the Federal Reserve Chairman, finally, a year and 2 months later, say, oh, it's not transitory anymore. And so what happens is that, as I always complain about the financial industry itself, not in a bad way, but in a like get off my lawn attitude, like Mr. Wilson, get off my lawn. What it comes down to is that there are just not a lot of smart ones in there. That's what it comes down to. There just isn't a lot of smart people in the banking industry and the finance industry. So and that's what the problem is. So when you put that with the Federal Reserve Chairman for a year and 2 months telling you, no, there's no inflation. Stop saying that. It's transitory. And now it gets to about 9.5%, 10%. And finally in March of 22, I guess it would be, he finally says, oh, I guess there's inflation. And so, and then Mrs. Yellen, who's the Secretary of Treasury, who is actually part of the U.S. government, not a quasi-government agency like the Federal Reserve, says the same exact thing. Like, no, don't be foolish. There's no inflation. Stop saying that. There's no inflation. And then she goes, well, I may have misjudged. That's pretty good for a politician. I may have misjudged. I like that. That goes up there with the using the word sticky when there's problems. Oh, it's like honey. Or bubble gum underneath a seat. Oh, it's sticky. So when you have a year and 2 months of that by the officials in America, you have to assume that anywhere from 33 to 60% of the bankers are going to do the same stupid thing. Okay? So in other words, that's why I say a lot of people in finance are not that smart. And so instead of defending themselves and preparing for the inflation, they pretended that it didn't exist. So what they did is they did the classic. They borrowed short-term and loaned long-term, which is the classic. But, as Mr. Kudlow would say, when interest rates are at 3 and 4 and 5% on the short-term, and long-term they're 2.5, 3 1/4, and 3.5, you're losing 1.5 or 2% constantly over and over and over again. So what happens is your cash is diminishing. And when your cash is diminishing, then what happens is you get forced to borrow yourself. You got to be a borrower. And if no one will lend it to you because they think you're a stupid banker, oh well. And that's exactly what happened. So, how's that? Does that make sense to you? Originally, I agreed it was transitory. Oh, you did too? Why? Why would you agree it's transitory? Because of simply supply chain backup. But it turned out to be more than that, and that is what stated the interest rate increase. Well, your answer is good. I hear that. All right. So I'm not going to be, and I don't like to ridicule anybody on the chat line. So I'll go with, I understand your downstreaming of supply chain. That makes sense. But when after 3 or 4 months it doesn't smooth out, then you really gotta in other words, what's that old thing that Al Einstein used to say about trying to do the same thing over and over again and but looking for a different result? When it's one thing for supply chain for a couple months, like look at the bottom, look at the V bottom of 2020, right? In February and March of 2020. And here I am saying, okay, the world is not coming to an end. They're trying to get rid of the short sellers, short put sellers, and you can buy this bottom in March of 2020. And sure enough, obviously I was right. Now you had a government at that point was less interfering, and was more in line with government laws, law and order. We have a government now since Mr. Biden came in who doesn't really care about law and order, and doesn't really care about capitalism, and doesn't really care about growth, and doesn't really care about the population. So after a couple months observing that, you have to figure that anything that comes out of their mouths is pretty much misdirection and harmful to everybody around you and yourself. Okay, so that's my my point of view of it all. I think that answers all your questions right there, doesn't it? Mountain West, does that make sense? And so that's where we are. And that's pretty much where it comes down to. It's not that complicated, really. That's why I say I don't find a lot of people smart in the financial industry. I've been all over the financial industry. I've been hedge fund world. I've been on the trading floors. I've been in the boardrooms. I've been everywhere, and I'm always scratching my head and saying, "Wow, we are a very simple creature, us humans, and it's amazing that we're not killing each other in the streets all day long." So actually, I'm always confused about the idea they may be fornicating on the streets all day long. That's how stupid I kind of think of humanity and the financial industry. So just is what it is. All right. So from there, where do we go? We go to the euro after that long-winded, history lesson. That's what that was. That's a history lesson. That's all facts. That's the worst part. Everything I said there are facts. They're flat out obvious and documented and proven. That's the worst part of it all. That is. And it's like humanity chooses not to learn from its past. They just want to erase it. It's very weird. All right. From there we go to the euro. Let's take out the euro. And there it is. And you can see the euro kind of pressed into that sell. It's just it did close in a daily sell there yesterday. We're seeing a little pressure, and that's that interest rate shift. We're actually seeing some fundamentals function once in a while, which is really nice. So what you see is, here's Mountain. I bought a bunch of FRB shares 2 months ago for $13. Then 3 weeks ago, I read about how unstable the situation was and sold them for about what I paid for them. Very good. Glad I did that now. Yeah. No, I hear you. Yeah, I hear you. It's a savings and loan too, so it's kind of like there are two types of banks. Well, there's more than that now because of Glass-Steagall changed, but the old-fashioned system was there were savings and loans. They did almost all their lending went to like mortgages and construction, and then there's regular banking, which kind of lends money to like businesses and that are not in the housing universe. So yeah, I'm really glad you got out of that. Yeah, it's it is what it is. It is. It's just and I guess what it comes down to is that one size does not fit all. That's what it comes down to. When government thinks that one size can fit all, you're in trouble. because I can't fit into a size 7 shoe, and I can't fit into a 58 pair of pants. So that's what the problem is, and I unfortunately Mr. Powell and Mrs. Yellen and the people in power right now in Washington think that one size can fit all. They can create one law that'll fit everything, and that's really the tough part. Yeah, no, I understood what you were talking about. That's quite all right. It's that text era, so we get used to the idea between a spell check and hitting the key next to us. It's no problem there, Mountain. But yeah, it's that's the tough part. Where government wants to tell you how it's going to work. How it'll fit everybody. We're going to make the rules so it makes everybody happy. I've never seen everybody happy. I don't care. They could be giving money away and they're still not going to be happy. There's always going to be a bunch that are going to be like, get off my lawn. All right, let's take a look at the euro and Chicago quad. Let's see, where's it at? Right there. Get off my lawn. There we are. You see there, it did close in the daily sell. Let's steal one of these red lines. I've had it. Oh, all right. I'll generate a new one. There we go. So it went into the sell yesterday. Cable did not. I was kind of impressed with that. It's just but again, this is such a dead range, just hanging around in the 110s. Low 19s, high 110s. It's not exactly explosive in any particular way. You can see the fast on the Chicago Quant algorithm is trying to break down through the zero line, but you see the green line is kind of hesitant. It's not even barely touching the manifold, so it's kind of quiet. Euro is starting a long downhill trek. You think so? What would you think? Interest rates are rising? Is that what it is? You think interest rates in the United States are going to go up? That's the only thing I would imagine a long trek would be. In other words, and when you say trek, like 6 weeks, 6 months, a year. I mean, we just came from all-time lows back in October. How much of a trek do you think? We trade basically week to week, day to day. So I don't, and I just it reconfirms. The next thing you know, I turn around 3 months later, and my work has been in a weekly buy for three months, and it's been going up. But each week is renewed with our mathematics. So yeah, give us a general idea what you're thinking. That could be interest rates rising here in the States, and I don't really think it's going to do that. I think we're coming to the end, so I think they're just adjusting for tomorrow's increase. That quarter point increase. I think it's short-lived. Well, it could be a few weeks. Okay, not that long, but the 4 hour is showing sort of a big round top. That makes sense. Yeah, you can see it in the daily too. You see that right there. Matter of fact, let's go over and put the 4 hour in just to see what it looks like. I have a chart yesterday. Someone was looking at gold. Not gold, silver. Look at poor silver. What they did to it yesterday. Remember I told you. Well, let me smack my face for that. Ow. Remember I mentioned. Oh, that's a lot better than me telling you. Remember I mentioned yesterday that cryptos lead these things, and sure enough, the stock market sold off, and the metals sold off yesterday after the webinar. Because crypto was down. Cryptos do that. They lead these markets nowadays. It's interesting. Let's put a 4 hour euro in there. Let's see what that looks like. There's 4. Because I like to be able to relate to what you're saying, basically. And then we can both look at it, and that's kind of neat, And then let's change the product. Yeah, how about that poor euro? Poor euro. There it is. Euro dollar. There we are. Here it comes. It's going to fill in a few seconds here. And it's getting closer. Cool. It's filling in. So, what else can we say about all this? Yeah, so that is that would make sense. I could see that for like a week or something like that. That would make sense. It definitely would make sense to me. Let's try this. Try 40 back. It'll load up again. I just may not be putting enough time. I went back 40 days. So it may need more time. Let's go back 50 days for a 4 hour. There we are. Yeah, that might be far enough back for the math. It might be still calculating because it's not. So yeah, that's kind of interesting. Let's see. George says time frame. You were right, Doc, on the metals. What you told me yesterday about them will be going right back down again. Yeah, yeah. Unfortunately, there are times where a blind squirrel can find a nut. A broken clock with hands will be right twice a day, and Doc will be right somewhere along the line. I join in with all those. Let's see. The daily on the euro is showing a flat top, but might be sort of round top. I relate to it more as a round top. Oh, there we go. Now we're starting to fill in more. Now what I might do is go like this, is try to shorten it and see if we can get some lines in there. Let's see what 20 days looks like. There you go. Okay. Yeah, there we go. So there's your rounding top on a 4 hour. Matter of fact, it almost, if we can go back far enough, it almost looks like there's an old pattern that traders used to follow. It's called 3 peaks in a dome. It was a very popular pattern for a long time. Remember that, Robin? Do you ever remember that pattern, the 3 peaks in the dome? This thing does have a dome look to it, but what it's really saying is that it'll probably get down into this 108.20s area. And that was an old pattern that we used to follow. Let's do this. Let's try this. 25. Let's see what 25 looks like. Let's see if it fills in there. There you go. So there's 25. And you can see we broke down here back on, what was that, yesterday. We went in, let's widen this a little bit more too. So we went into the sell right there. And I'll tell you, to be honest, I like using it this way. I find it to be more insightful. Let's see if we can change the style here. And what we're going to do is we're going to make this a histogram. I think that's the way to do it. Is that what it is? No, you know what I do? I do the combination. I know what I do. I leave that alone and I make, let's see, I make the green a histogram too. And then make this the line. That's what it is, like that. And then I make the, let's see if we can fix this again and make that thick. Like that. And when they both join together, I find it like right here. When it goes into the buy right here, it shows strength. And this is combining together the fast and the slow together. And then when they both join in on this side right here, it went into the sell right there. And then you get your break, the next bar, and it keeps on breaking down all the way into, it goes into a buy on this one right there. And then the next bar goes back into the sell. And then it goes back into the buy for this peak again, and then it goes back into the sell there, and it's been in the sell since, even with all this action there. So yeah, I can see that rounding. Now let's see if we can go back to, let's see if we can do 30 days. See what 30 days looks like. And see if we can, but I kind of agree with you. It has that hump look to it, you know. It does have that. Let's see. Mountain says, I am busy this time of the day in the morning, but today I was all caught up with my work, so I was able to make a live stream. Cool. I really appreciate that. Do you watch this on what do you call it? On YouTube, where they replay them, the recordings, the playbacks, that type of thing? Let's see if we can keep on tightening this up. I want to see that hump. I also want to see if it is a 3 peaks in a dome. Yeah, see, it has the great potential to be a three peaks in a dome. And that point right there was the top of the three peaks. And there's one peak, two peak, three peak, four. I mean, sometimes we've seen more. That could be a peak. That could be see, that's a peak for sure because it's higher than that. And let's see if we can get back a little bit further. It almost has that look to it, like that's what's going on here. Okay. Because you could just jump in, say something you want seen, and say goodbye like that, so I know you're not there, and I'll give you an explanation knowing that I'm not looking for a response back. If you want to see something, that type of thing. Yeah, that could be a three peaks in a dome characteristic without a doubt. Remember, we're coming from all-time lows in the euro against the dollar, which is, pretty prolific when you think about it. I mean, I said that yesterday. It was like, people have been saying to me, Doc, when's it going to go to, even? It was like, yeah, well, give it time. Are we there yet? Are we there yet? It's that type of thing, Are we there yet? Yeah, this could be a three peaks in a dome type of characteristic. I just want to, because we know it's been climbing from the fives because it was down to the 96s. So this has that look. It does have that look. And this could be the dome itself. Domes develop like that. Usually this doesn't happen on this hump of the dome. This happens. It's usually a spike above. And then it breaks down and it's going to visit this area here, the 108s. That's usually where it goes. And that would be the three peaks in a dome pattern that we used to watch for decades upon decades. It's really hard to tell if people even pay attention to that stuff anymore. But I just thought I'd mention it. Yeah, in October. So yeah, that's got that look to it, like it's a three peaks in a dome type thing. It really does. Matter of fact, if we go back to the daily and we tighten it up, I bet we see the three peaks in a dome even more. Now, see that in February we were up to this area once already. So that if a good three peaks in a dome would not have had that. We would not have had that area there. It would not have done that. And so that's the problem with that. But when we go like this with J4X, I don't know if we can yeah, so there's, I guess that's the October lows. Okay, so yeah, all right there. But I'm a little concerned that it got too high up there for it to be the three peaks in a dome. But it does have that look to it. It could be a short-term pattern. You know what it's saying? It's not a long-term pattern. In other words, there's a peak, there's a peak, there's a peak, there's four peaks. No, I'm sorry, there's three peaks. There's your three peaks right there. 1, 2, 3. And this is the dome. And now it'll trade back down to the 108. And that would be the way to look at it. All right. Oh, you didn't see that. Wait a second. Let's try that again. There we go. There you go. There's your three peaks. 1, 2, 3. And this is the dome. And that's the tip of the dome at the end. This is the beginning of the dome. That's the end. Usually when it hits the dome, it drops much harder and faster. And it'll come challenge these lows first, bounce around a little bit, and then probably challenge this low. And that would be, usually it challenges the third peak's bottom, which is right there. What is that? That's like a little higher than 108. So that's the way I spot it. That's the way I see it. All right. From there, we'll jump over to cable. Let's see, where are we at here? Yeah, that's it, right there, cable. And there's cable. Cable's now flirting with the sell. Mountain, you may be right. Maybe interest rates are going to go. You know what's going to happen? We're going to raise one more rate for sure. They're going to definitely raise, tomorrow, a quarter point. And then what will happen is that then from there, everybody's going to be listening to the news conference of what he says. And if he insinuates that he probably wants to raise another quarter, that's what British pound and the euro are telling us, is that that's not in the market. And that's why we're seeing this. Now, when it comes to the stock market, I want to say that it's partially in it because it has a different timeline compared to currencies and bonds. they're much more sensitive to short-term action. That's why they refer to them as the bond vigilantes, because when they make a move, they don't wait a day. They don't wait half a day. They don't wait an hour. They don't even wait 3 minutes. They all just join in and just crush a market instantly because there's no exchange, so there's no listed market. So it doesn't have like an orderly fashion. When it wants to go down or up, it just goes. That's why they call them bond vigilantes. If you've ever wondered why they call them bond vigilantes, it's because when they make a decision to do something, they don't look for anything but doing it. In other words, they don't go like, oh, well, maybe we should wait a week, or maybe we should discuss it. No, they just go, okay, we're getting out of this position, and they slam the daylights out of something. Or vice versa, they take it like there's no tomorrow. They buy it like it's free. So, all right, and there's the cable. So from the cable, let's put that up on J4X too. But that's why they call them bond vigilantes. It's because they don't hesitate like stocks. It takes a while for money managers to figure it out, and it takes a while, and they're putzing around, and the whole bit, the whole bit. Let's see. Mountain says 100 moving average is making a long round top on H1 and H4 for euro. That makes sense. That does make sense. Yeah, that makes total sense. And this might be the peak, and we may see, in other words, I don't think, I'm going to repeat myself, I don't want to be geriatric here, but I don't think that in the currency or the bond market, they're prepared for another quarter point increase after tomorrow. And I think the stock market is kind of somewhat prepared for it. In other words, they move slower, so that'll be that up and down stuff. All right, from there, as you can see here, same situation. Cable is trying to break down, and we're getting a red at the same time, just like we're doing right here with a red and breaking down through the line, the green. Indeed. All right, from there we go over to Swiss, and there's the Swiss, and it's kind of telling us the same thing. It's trying to lift, and that means it's losing against the dollar, so it's obviously an interest rate factor more than anything else. Yeah, makes sense. And our work is kind of saying the same thing, which is kind of surprising. I really thought that I don't know what I thought when it comes to if it was in stone or not. In other words, if it was definitely happening, and I kind of think that they have, without a doubt, obviously tomorrow, and then from there they may somewheres along the line try to let the markets get pushed down a little bit. Remember, this is a government of criminals at this point, so they just want to front run anything they can to make some money. So if they get the Fed to go sideways, our Fed right now will not even talk about spending. So Mr. Powell, last meeting 6 weeks ago, when asked, if they stop spending so much in Congress, would that be better for you to fight inflation? He said, I never look at that. That's what he said. I never look at that. I have no idea. Everybody else in history as a Fed chairman looks at that stuff. This guy doesn't, which means he's part of the weasels. So don't be surprised that the markets interpret this as more interest rates coming, and they put pressure on all the products. And then what happens is that Powell, somewhere along the line in a news conference 4 weeks from now or something like that, says, we've been thinking about just watching for a little bit longer before we raise the next rate or something like that. Don't be surprised about that, because they're weasels, total weasels in this government. So spending in Congress is not part of the Fed mandate. To be honest, there's no real the mandates don't make any sense to begin with, so it doesn't matter if it's defined or not defined. Every other Fed chairman has always said that they watch the way government spends money and if they overspend or underspend. It's part of the process of watching it. When it comes to unemployment and inflation and so forth, how can you raise? Think about what you're saying. Spending mandate. about the mandate. It says not to slow the economy. The economy slowed. So in other words, why is it slowed? Because of the rising of interest rates. Yeah, that's what it is. The mandate itself makes no sense because think about it. Slowing an economy is not exactly the way to get rid of inflation anymore. And at this point, our labor numbers make no sense to begin with. So under Mr. Obama, they changed the way they calculate labor. Like I said, I used to make jokes when President Trump was president that with the way he's going, the labor number might go minus, like the way oil went minus when he was president. Imagine we had oil trading at $39 minus a barrel at one point. So, with Trump's policies, I mean, we had 6.5% GDP. So, I mean, when Mr. Trump left office and Mr. Biden came in, we had 6% GDP. We have less than 1% GDP now. So, it's because the Federal Reserve is pulling back too fast. In other words, they're raising rates when they should have started a year and 2 months back raising rates. And they wouldn't have had to raise them to 5%. They could have raised them to 3%. And inflation would have probably stalled out in the 3 or 4% area. And that would have been not run to 10%. Do you get anyone to pay you $37 to take a barrel of oil off their hands? Not lately, no, definitely not. But when Mr. Trump was president, they did. That is wild. Yep, when Mr. Trump was president, people did. All right, from there we go over to the yen. Let's see what the yen is up to. There's the yen. And we'll put it up on J4X. And the yen is still, it's kind of flat today, but it's looking firm. Let's put it that way. That's playing right into that interest rate thing. I don't know if that yen's going to play back so quickly. When I said just buy 20% a couple days ago, was that Friday? I think it was Friday. Yeah, it was Friday. It was like, and then buy cheaper. It's going to be real hard to buy cheaper. So you're going to just, whoever was listening to me is going to only be making a quarter of what they could have made. But that's quite all right. That's the smart way to trade because you want to stay in business. Yeah. Isn't that something? When Mr. Trump was president, people paid other people to buy oil. Here, take my oil. I'll give you $37 a barrel. Take my oil, please. Yeah. That was something. Matter of fact, it was live here we have a webinar on it, live. I remember talking about it 2 days beforehand. I said, it's going to go minus. You watch. It was trading at like $12 a barrel. It's like, watch, it'll go minus. The next day, it went minus. And then I was like, watch it. It might go down to like $18 a barrel minus. It went to $39, I think it was. It was crazy. It was crazy fun. There is the yen over on Chicago. You can see that there. Again, it's not, it's higher today than yesterday. But it's not anywhere. It's not moving anywhere. And it's past that 36 area, which is saying to me, uh-oh. I think Mountain is right on target. That's what I think. Yeah. And I imagine that's what the problem is going to be. They're just not prepared for another quarter. And tomorrow, after he does the news conference, or when he does the news conference, he may reinforce the idea. There's another quarter coming, guys and gals. All right, from there we jump over to the Turkish lira. There's Turkish lira. It slid into the sell yesterday right there. Where's that line at? And the weekly is still hanging in there by the hair of its chinny chin, both underneath the manifold, but still in the plus, both of them. So we're seeing some weakness in the, good weakness for Turkey. People need that thing to go down, not up, because they're getting beat up. All right, and then you can see it right there on J4X. Right there. And there's you can see that it's still in the 21 area. I mean, that all-time high of 22 doesn't seem to be that far away. That's the issue with it all. Wes says, you and Robin should have made millions of dollars from that minus 37 per barrel. We should have? You mean we didn't? Okay. All right. From there, where do we go from there? Oh, I know. We go now, and nowadays we do the King Peso, the Mexican King Peso. Right there. There's the King Peso. It's hanging down on the bottom of its range, and you see the weekly is trying to turn up. So King Peso, which will be the bulk of the bricks when they get rolling along, if they can get rolling along. I heard someone on one of the news channels just like 20 minutes ago when I was talking to you about something. The guy said, China wants to be the world reserve currency. He says, I'm not really worried about that. That's not going to happen. I'll tell you this, the Mexican peso will become the world reserve currency before the Chinese yuan does. That's for sure. And that's why we call it the King Peso, because it will be the most powerful currency in the block there. Let's see. Do you realize what margin was when crude went negative? Yeah. Yeah, it's whack. But we're option traders. But you should have seen the volatility in the options. Trying to buy the calls because they knew they weren't going to give them away for free. The options exploded in volatility because they knew that oil was going to try to lift back up again. So you had to do it in a binary fashion. And no doubt, when dealing with options, the volatility is always wild in the oil market. I mean, it's way out of sync with the rest of the what do you call it, the volatility world, I guess you could say. No, I don't know about that. Oil trading were actually somewhat restricted back then. Yeah, but the options were trading, so there was no problem. You could buy the contract. I mean, I could buy the contract. There was no problem there. But you have to take the delivery, so you have to have enough equity to be able to take delivery of a barge of oil. I have exchanged certificates before, where you trade off, you take delivery, and then you go around for 3 days finding somebody in Philadelphia or something like that wants to trade with you, so that you save the cost of transporting the barge down. Okay, from the King Peso. Oh, let's put King Peso up on J4X too. And this will be the powerhouse in the bricks, the peso. Doc is taking this thing apart. We've looked at all the bricks that are outstanding, and the peso will be the powerhouse in the bricks. And then second behind it will be the South African rand. And then behind that will be the Indian rupee. And then from there, it starts to dance a little bit. You got that'll be something like 75% or that'll be over 80%. Those three alone will be 80% of the brick. Just those three. So then you can throw in all the other stuff. It'll be almost pennies on a dollar. And the yuan and the Brazilian real fight it out for the bottom. That's really weird. So we like to function here on real reality. So when people want to talk bricks, we're very comfortable now talking bricks. We've been dissecting it here for a while. Tank farm. I got a backhoe. I can dig a hole and put something in it. Russia will probably be anywhere from 4 to 8% of the index, depending on their political situation at the time. And if they would clean up their act, they could move into the rupee position if they really cleaned up their act and started paying attention to their own laws. It could if Russia could clean up its act politically, it could go peso, South African rand, Russia, and Russia could be almost the same size as South Africa. But still, remember, Mexico is 5 million barrels a day of oil, and it has a very diverse economy. From selling drugs to manufacturing Ford automobiles. So, that's going to be the bulwark of the BRIC for the time being. Could one of these other currencies over time move into that position? Most definitely, if they became very productive economies. Can China one day be a powerhouse in it? Sure. Once the Communist Party is gone, more than likely it will be. Because then the economy will open up. But right now, it'll never go anywhere with the Communist Party running it. It'll always have that characteristic of being a colony of America, an angry colony who hates its colonial power. All right, from there we go to the last two currencies. We look at the CAD, the Canadian, and we look at oil. And you can see as the CAD again there, let's put it up over here on J4X. The CAD is trying to move up again. You can see it's bouncing up right there. The CAD was in a sell for a couple of days. Now it's trying to bounce back up. That means that move in the oil that we were seeing, let's put it up over here instead. That oil in West Texas Intermediate, which was trying to pop up for a couple of days. Let's see if you can see it right there. You can see there, it tried to pop for a couple of days there. Let's put it up over here without the hinkies. Yeah, see, it was up here on Friday. It tried to lift up. It was up there a little bit for a while yesterday until it started to roll over towards the end of the day, and now it's down to the bottom of these 3 days right there. And so because of that, the Canadian, let's go to the Canadian again. The Canadian does the opposite of it. So right now it's trying to pop up. More than likely, oil's heading south. Let's see, Russia produces or can produce 12. Yes. Yeah, that's why I say it has the potential to be a powerhouse in the, not now, but it has more, let's put it this way. Russia has a way more potential than China does. China is, at this point in time, sooner or later, Russia is going to clean its situation up and start moving into the capitalist side of the world. Most of the other world is probably going to start joining in the capitalism too, and following laws and being able to grow and so forth. I mean, they have an educated workforce, they have resources, and so that opens the doorway. China, on the other hand, has an educated workforce and some resources, but it has a government that has no interest. If it had an interest in capitalism and growing, it would have never allowed like Evergrande and all those others to go bankrupt. Because the amount of money that would have taken this to just even pretend to be capitalist was very small. It was only like $6-7 billion. We showed it in a webinar. They could have easily bailed out Evergrande, the foreign investors. They chose not to. And by not choosing to bail out the foreign investors and only bail out the domestic investors, says you're not ready for prime time when it comes to economy and growth, That's what that says. But no, I agree with you. I could see Russia cleaning its act up over, say, the next 3 to 5 years, and getting into a better economic situation and becoming a much more productive economy. I don't see that for China. China has no interest in that. Xi's going to be president for another 5 years, so they're going to stay solid communist. And like I said, the simplest way to tell if they had the ability would be when they had investors from outside China go bankrupt, they could have bailed them out when they bailed out the domestics, and the numbers weren't big. It's not like they would have to spend like 150 billion or something. It was really small numbers. It was like $6 billion, $3 billion. I mean, if you're really a world power, what is $3 billion? That's something that gets stuck in between the sofa in your office. That's nothing. That's pennies, you know. And that tells me nothing more. That alone tells me that they don't have the ability to be prime time. All right. Oh, you know what? I heard somebody. Let me emphasize that a little bit more. I heard somebody get on. The guy was asked. The fellow that said, "No, I'm not worried about them becoming world reserve currency." I heard him when I was talking to you guys. He said, here was something else that was very interesting. He said, the questioner said, "Well, you know, aren't you afraid that the dollar is going to have problems because Saudi Arabia sold oil to the Chinese for Chinese yuan, you know, the renminbi? They have two names for the thing, and I guess like the way we say it's the dollar or the buck, you know, that type of thing." And so he said, and I thought to myself, they didn't sell oil for the renminbi. They sold it for gold. And I showed the article a couple days ago, like 4 or 5 days ago, and I even talked about it yesterday. So the Chinese bought oil with gold. I'm sure they were unhappy about it. They first bought it with the renminbi, and then the Saudis converted it in China into gold and moved it out. So, you know, that's alone shows you it's not ready for prime time. There's a gap on dollar index. What effect will it have with the gap to be closed? You know, Clara, I've seen, what do they call that? Gap theory. Robin and I know we've talked about it off and on throughout the decades, honestly. Sometimes a gap will just stay open and never close. You know, in other words, you know, on the short term. And then when it finally closes, it could be 6 months to a year and a half later. Major gaps sometimes never close. Sometimes they do close. You know, in other words, you're looking for a symmetrical gap to come down the road. And sometimes people think that it's going to come in 3 days or 5 days, and sometimes they never come at all. So I don't really see that much of a problem. Where was it? The gap in what? Let's see, where's it? In the dollar index. Let's take a look at the dollar index again. Yeah, gaps, sometimes they close, sometimes they don't. Gap theory. There it is right there. There's July oil. Oh, it's right in front of my face. I don't see the gap. Where's the gap? Oh, this one right here, maybe? Back in April? Did they gap it up? Oh, yes. You know what that was? What was that? That was where Saudi Arabia just raised rates $5 that day. Remember that? Now, it has traded back down to it. You can see that. But they didn't do that as a gap. They did it, you know, slow, steady process. Is that what you're talking about? Back in April with the big gap? That's when Saudi Arabia came out on Monday morning. Well, I forget what Biden did bozo. He did something bozo on Thursday or Wednesday. He insulted them again. I forget what he did. He did something. Our illustrious president did something stupid on Wednesday or Thursday. It's Ramadan. So it didn't hit Saudi Arabia until Sunday evening. And so they decided to raise the price for $5 a barrel or something. I can't remember what Biden did, but he did something crazy. Go back to look at my webinar back then, and I'll feel it. I probably, you know, I said it without a doubt. We talked about it, and I gave the same reasons as I just gave you. It was Ramadan, and he did it on Thursday, which meant that on Friday they didn't have a chance to trade in it. So go back there and check it out. Yeah. Yeah, no problem. Okay, from there, where do we go from there? We're almost out of here because the markets are, U.S. markets are getting ready to open. So why don't we do this? We'll run through the energy sector, and then we'll run through the metal sector real quick for those who go back and look at So you can see there 73.52 on the back month of oil, whereas the front month is 74.48. It's over $1 cheaper 3 months out. You can see they're all on weekly sells, having those issues there. We go to nat gas. There's nat gas. You can see the same situation, still moving down, threatening the $2 area, whereas in Europe it's at like $28. Let's put Brent up there. There is Brent on J4X. Yes, on J4X. There it is. And so there's Brent trading in the 78s, and the U.S. is 74, so there's like a $4 differential there. And let's see when the math fills in. And then from there, let's take a look at natural gas. Nat gas right there. And so that's our U.S. natural gas trading at $2.20 a cubic foot. And then when we, you can see it right here, same situation, 2.2053, that type of thing, like this, like that. And then we go over to Spain and look at the energy company in Spain that is that represents the European oil, natural gas, that is. And there it is trading. Oh, it broke the 28s. So it's trading around $27 a cubic foot, between that and $28 a cubic foot. And then we jump over to the metals complex. Let's take a look at that. And there's gold. There's gold trading at, you can see that at let's put it on here too at the same time. So gold is trading, that's silver. So silver's trading at $24.67. And right there it is right there. Heading back down from that gap up. And we were in a daily sell, and we're heading for a weekly sell with the fast breaking down there. So it's having its issues. Imagine it'll go play with the 24s, that type of thing, and right now it's at the high 24s. Then from there we go over to gold right there, and we'll put it up on J4X too at the same time. And there is gold there. And as you can see, gold did the same thing yesterday. It's found a way to sell itself down. It's been in a sell for about 4 or 5 days since back in here. And what else can we say about it? The weekly is starting to feel the pressure also. Fast is broken underneath. Also, the platinum has been breaking down. We were trying to get into a buy yesterday. It's failed, and it's been just gliding down. And when platinum gets sold down, it has a habit of infecting the rest of the metal sector. It does that. So that is that. Let's take a look at copper right there. And we'll put copper also up on J4X. And then we're going to get out of here. Copper. I know it's around here something right there. There it is. And you can see copper right on the edge of going into the sell. We've had a couple strong days. We're in the weekly sell, so we didn't trust any of those longs to begin with, but it's starting to show itself now. And so, that is it. We're out of here. Doc from North America. Catch you tomorrow on Happy to Hump Day. This is Happy Trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a good and smart day.